Hi everybody, my name is Rin Longmaid. I'm a restaurant broker and consultant at Santa Rosa Business and Commercial, and I'm the founder and host of this series, Deep Dish Live, where we explore the business of restaurants. SBA lending for small business can be cumbersome, quite frankly. And when we say small business, I don't remember what the number is, but you'd be surprised. Like it's a high number. Way up in the millions. You know, in restaurants, a decent restaurant, gross sales for a decent restaurant, 1.5 to 3 million. That's a restaurant that's doing really well. Certainly there are some that do more in gross sales, some that do less, but here's the deal with SBA lending. It's a program that initiates at the federal level, and it isn't the feds don't issue the loans themselves. What they do is they guarantee the loans through lending institutions, and not all SBA loans are created equal because the feds have mandates around their loans, but then each lending institution layers on their mandates. So if you go to Chase, if you go to a large corporate bank, Chase, Wells Fargo, Bank of America, they're going to layer on pretty hardcore restrictions about who they'll lend to. The biggest one is about real property, and I'll get to that. But if you go to a local lender, so I'm coming to you from Sonoma County, we have a lot of local banks and credit unions. I can say I have worked with many of them, and they all make the SBA process as easy as possible, which is not to say much, because you know, if you're going to be applying for an SBA loan, two things have to happen. One, the business itself has to have strong enough cash flow to qualify for an SBA loan. And SBA loans, lenders, the minimum amount that a lender will loan to, it varies from institution to institution, but it's usually about $250,000. So if you're looking to buy a restaurant for $150,000, more than likely you're not going to be able to secure an SBA 7A loan anyway. And you might be asking yourself why. Why is because it takes a lot of work for those institutions to issue, to vet and issue those loans, and to manage that loan over 10 years, which is usually how long a 7A loan is. So they don't want to be lending, you know, it has to be worth their time and money as well. There are SBA microloans. There are not a lot of lenders that represent those microloans, but there's also third-party entities and business or organizations out of San Francisco and the North Bay that will issue microloans. They can be also difficult to get. So the business itself has to qualify, then you as the borrower need to qualify. And you know, of course, the best borrower is somebody who has some financial wherewithal and has industry experience. Here's something really cool to know. If the SBA 7A will lend to a borrower who does not own real property, meaning if I did not own a house, I could still get an SBA 7A loan, which is if you went to Chase or to Bank of America or to one of those larger institutions, that will not be the case. They will mandate that the buyer owns real property. So here's a little story. I've told this story before, I'm going to tell it again. I have a client, he ended up being a really good friend of mine. He came to me from San Francisco, lived in San Francisco, still lives in San Francisco, and he was sort of crestfallen. He's like, I don't qualify for an SBA loan, so I either have to find, you know, an asset sale, a restaurant that's selling because they're not successful, or I've got to get creative about how to buy a restaurant. So I asked him a bit about his background. He had really robust background in the hospitality industry, years and years. He had passive monthly income of like a lot, in the thousands, with a family trust. He's sitting in front of me. I'm like, you are perfect for an SBA loan. And then I found out he'd gone to Chase, and that lending institution denied him the loan because he did not own real property, but they did not tell him, and of course they're not going to say, well, we're not going to loan to you because as a bank, we need to collateralize your real property. But if you go down the street to the local credit union, they will loan to you. They didn't say that, but he came to me, and we went back to the restaurant he wanted to buy. He didn't end up buying that one, but we were able to secure an SBA loan for him, and he bought a restaurant right before COVID hit, but that's a whole, or actually right after COVID hit, but that's a whole nother story. Something about the collateralization of the SBA loan, you might be thinking, well, if the SBA doesn't collateralize the real property of the buyer, how do they collateralize the loan? And herein lies the risk for the lender. They collateralize that loan with the assets of the business. So the furniture, fixtures, and equipment, the picnic table, the 6-burner stove, the salamander, the Type 1 exhaust hood. Well, actually not the hood because that's a fixed asset. So they don't collateralize it with much. So there is a pretty serious vetting process when the SBA goes to loan to a restaurant because, one, restaurants are notoriously risky to be successful in for a multitude of reasons, and then two, it's a personal property sale, so it's collateralized with the furniture, fixtures, and equipment. One other little detail about that is, you also might be thinking, if you're in the restaurant industry, well, I know that my landlord has some of my furniture, fixtures, and equipment on the lease because it might be a second or third generation restaurant, and somebody might have gone out of business and left their furniture, fixtures, and equipment. So then, which is always my least favorite thing, the landlord then absorbs them and puts it on the lease because the landlord owns it. I'll do another episode on that. I've talked about it in the past about how I think that should be handled because it's a very cumbersome way to handle it. So the landlord, the SBA, right when it's about to fund, they're going to send a release to the landlord, and the landlord needs to release claim and allow access to the lender. In the case of the borrower defaulting, that the lender can come on site and either sell the furniture, fixtures, and equipment on site, or take the furniture, fixtures, and equipment off site and sell it. But honestly, what the SBA does, and you guys, anyone who follows my series knows, I can sell a restaurant. If it's in default of an SBA loan, I can turn around, depends upon how much is left on that loan and how much the level of cash flow the borrower has been experiencing over the years, but more than likely I can sell the restaurant and the SBA can put a demand on that sale and recoup some, if not a lot of their money. Okay, I just went through the SBA process with people, an institution that I love. Lender, the person repping the loan is somebody I have a lot of respect for. It was an arduous and painful process, and the buyer did not end up moving through with the purchase, not because of the SBA loan, for other reasons. But here's so what happens is the SBA, they'll pre-qualify, they'll say yes, we'll loan to that, and then it goes down to the underwriter. The underwriter sounds like this mythical character, right? You never know the underwriter's name. Sounds like they work under the cover of night. They're like some celestial being that nobody sees. They live in outer space. What they say goes. You can't argue with the underwriter. There is no arguing with you got to do with the underwriter is an employee of the institution more often than not, and what they're tasked with is mitigating risk for the lender. What they say is sometimes arbitrary, sometimes not. There's standard stuff. We have to get, verified tax transcripts from the business and the borrower. That's standard stuff. But you as a borrower, me as the agent, the seller, will get copious lists, and then we'll get those lists again because the information wasn't given properly, and then we've got to give it again. So here's an example, and this is why I say or not. If you can buy a restaurant with seller financing, with private money, with family money, pulling money out of your house, do it. Because an SBA 7A loan is, you as a buyer are already dealing with so much when you're buying a restaurant. You're negotiating the lease terms with the landlord and giving the landlord so much financial information, lots of back and forth. You are trying to transfer the ABC license, whether it's a beer and wine or a full liquor license. You are dealing with the health department, which a change of ownership, you guys, I talk about this a lot, depending on the county in which you operate, they're going to do code enforcement. Anyway, the borrowers are dealing with a lot. So then layer onto that these demands from the underwriter. It's a full-time job when you're buying a restaurant. That's why it's great to work with a qualified broker like me or anybody in my office, because we are going to do a lot of that heavy lifting for you. So here's the example. my borrower had put in their business plan. You have to do a business plan, even if the business is up and going. It has to be a pretty robust business plan, and it has to have pro formas. And what pro formas are, they're projections into the future about the profit, expenses, and ultimately net income that the borrower expects to see in year 1 and year 2, sometimes year 3. Year 1 is almost broken out monthly, so that year 1 is usually pulled from the year, the most current year or the best year, if we're in COVID, of the seller, of the business's financial statements. So in the business plan, the borrower had mentioned, I'm working with a world-class consultant. Whoa. The underwriter, how much does the consultant cost? Has the consultant been paid? I need an email. I need a letter from the consultant, a signed invoice that these are the services that the consultant provide. Here's how much was paid, that nothing else is owed, that no other services are going to be provided. So that was from the consultant. Then from the borrower, unfortunately the borrower paid out of like a private account, and then paid, it was, you guys, I'm not talking $10,000. I'm talking $5,000. And so much time was spent trying to check this box. We never did. We never got that box checked off before the buyer decided to cancel the agreement. Never did. We supplied bank statements that the $5,000 had been paid. That bank statement's not right because it doesn't show the account, and we don't know who. Let's put it in perspective. The cash flow of the business, very strong. The sale of the business, the purchase price is big. It was, a fraction, $5,000. So you can see how maddening that was for me. Super maddening for the seller, for the consultant, for the borrower. So basically what I'm saying here is, a restaurant that's for sale that qualifies for an SBA loan is gold. You should look, if you're looking for a strong business with strong cash flow, look for something that's been vetted by the SBA. Whether or not you're going to use that SBA as a lender, I would think long and hard, and again, I would have that down as my third, fourth, maybe fifth option for funding the purchase of the business. So I'm going to end there. I want to say that last month we came from Lo and Behold. We live streamed from Lo and Behold. The winner of this $100 gift card to Lo and Behold is Holly Jordan. Holly, I'll reach out to you directly and I'll get this to you. So for those of you who have never joined us at Deep Dish Live, every episode I live stream from one of your favorite Bay Area, San Francisco Bay Area restaurants, and I always give away a $100 gift card from the host restaurant. So if you're interested in a $100 gift card to Wild Goat Bistro, please like and make a comment on this post, either now while we're streaming live, after it posts, anytime between now and the next month that Ed and I join you again for our next episode. I'll post this on LinkedIn. I'll post it on my Insta account. I'll post it wherever you comment or make some sort of engagement. You will qualify to win this $100 gift card to Wild Goat Bistro. In the meantime, I'll see you next month. My name is Ren Longmaid. I'm a restaurant broker and consultant, and we'll see you next time.